Good morning, this is Butch Shorrock for Options University. It's Friday, July 27th, 2012, and welcome, ladies and gentlemen, to the market that took place during this past week. And as we look at this, let us first consider the fact that access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that thought, let's take a look at the last 4 days, coming into Friday and the weekend, in this end of the July trading session. And we see that as we look at this last week, we were in a down cycle in the market, in what was basically an uptrending market, giving us higher lows and giving us higher highs. We lost some of our steam on this high, and we lost some of our steam on this low, and we see that we began to pull back, and there was thoughts that we might be looking at some kind of pullback in the market. Well, we did pull behind those diagonal lines that we were talking about. We saw a doji on Wednesday right over there, which showed us that the market was basically having some kind of support at this level, all right, which was lower level than it would have expected out of an uptrend. And then Dracht came out in Europe talking about the euro and the support that the European banking, the ECB, was going to give to the Spain, and whatever was necessary is what he said. That's what would take place to keep Spain in a position of viability. And the market at around 6 o'clock in the morning Eastern time did a complete reversal. It was down. The Dow was down about 45 points going into 6 o'clock, and within seconds suddenly they made an 80-point turnaround as the market was heading up. And we saw this big day took place with a nice big gap up where we reached 1360 for the day. Now the real question is, where are we going? The interest part is, what is the market doing? It is cycling basically sideways. In order to really have something, we've got to break above this level with some kind of volume, some kind of gusto. Otherwise, we're just in a narrowing range for a sideways trending market. We'll find out in the next 2 days what's going on. Here we are, the end of the month of July. Here we are, time for some window dressing. If it's going to pop, this should be the time that it would pop. But what does August typically bring us? Well, from 1901 to 1950, August was a big month for the market, because what we saw take place during that time was a lot of money came into the market because 85% of the population were farmers. Well, we don't any longer have that kind of background taking place in the market, as we see August one of the worst performers since 1987. Now, things have contributed to that since 1987. Some of those things are turmoil in Russia, Asia currency crisis, long-term capital management hedge fund debacle, which took place in 1998. Dow shed 6.4% in that just one day alone. We saw that other things happened. Saddam Hussein triggered a slide in 1990. And so, these things are things that typically have really caused August to be kind of a sick month. At this particular time, what do we have going on? Well, we've got the euro going on. We've got the European crisis. We've got the European debt crisis. We've got decreased revenues coming out in a tremendous amount of the earnings that have come out. Our corporations have responded very well, but we're not showing any great growth, and expectations are that as time goes on, we will see things slow down even further. So, is this the time for the market to explode? Probably not. Will it? Well, we're supposed to trade what we see, not what we think. And right now, we are in an upcycle, heading for our previous resistance, which is up there at about 1380. So keep in mind that we're just cycling in very, very tight ranges with big moves on a daily basis in the S&P. Let's take a closer look at it in a magnified view, and we see that we were in a down cycle. All right, the low took place on Tuesday. On Wednesday, we had our doji, which was a reversal pattern. And then what we saw is we saw that news come out, market poised and ready to continue its cycle by going back up. But because of that news overpowers everything. We ended up with this huge day up. 9 out of 10 sectors in the Dow were in positive numbers as we saw this nice big move in the Dow, 22 points in the S&P, and things moving up with much vigor. All right, what can we expect on Friday? We can expect possibly a little bit of certainly don't expect another big candle like we got on Thursday, but we certainly can see a continuation. We can see a sideways pause, digesting as much as a 50% retracement on Thursday's candlestick certainly would still be bullish, as we're sitting well above the 30-day moving average, and so we'll see whether we continue on up. Notice we have the 30 above the 50, which is above the 200, which is a bullish sign for the overall market. But remember, the woes of August seem to come upon us more than we want to talk about. Now let's take a look at some of the other indexes, see if they followed the same pattern. Dow gave us a bit of a hint there with our upward candlestick that we were going to head up. Dow still trading within its zone, but highlighted for you, and I hope you enjoy these yellow highlights to show you what pattern and what particular area we're investing in. Notice we have a single top, we have a double top. This is headed for a triple top. Could it be a triple top with a breakout? Well, we'll see. Does the breakout mean anything? Only if it takes place with big volume. So we'll see what happens as the market responds. Watch that first hour this morning. Look for the opening high, opening low to give you an idea whether it's trading above that opening high or below that opening low as to where the market's going for the day. Expect for Friday a smaller trading range than we had on Thursday. NASDAQ, not showing us the same kind of strength, not showing us much of anything as far as the NASDAQ showing us and keeping up with the overall markets. Notice, big move out of the NASDAQ on Thursday, but it's still well below the strength in the Dow. Only 30 stocks in the Dow, but our tech has not made the move. It is not leading us up. Same with the Russell 2000, as we see that the Russell 2000 is basically barely above the 200-day moving average and not showing us the same strength that we see. Watch the Russell today. It may give you some kind of an indication, because all you got out of the Russell yesterday was basically almost a doji, kind of a spinning top, and looking very much like there's indecision in the Russell as to which way we're going. Again, an up day. All of the major indexes had up days yesterday, but none of them showing the same strength that the Dow and the S&P showed us. We saw the VIX retreating. We didn't hardly get outside of our zone, as we have now retreated back into the zone. As the market goes up, the volatility tends to go down, and we see that the volatility did just that, as we're kind of in the middle range of our normal trading range for the fear index for the overall markets. Bonds had its breakout, didn't continue on up, but again broke into higher highs as the bonds really showed us what a leader they've been the last couple years. As we look at the financials, the XLF, we see that it's trading right in its trading zone, and a nice move up. This looked more like the NASDAQ, more like the Russell than it looks like the S&P. Well, that's not really fair, as we see the 30 above the 50, above the 200. So we are seeing some strength there, but again, we got that doji out of the XLF. We need the financials to keep contributing if we expect the market to have any kind of meaningful rally. Oil sat right in the middle of its trading area here. As we say, oil not moving much further based upon USO, which is our ETF, to give us an indication of what oil is doing. Looking at gold, we see gold rose with the overall market, heading into its the top of its trading zone. As we see, this hasn't been shaded in, but we see our yellow box where gold's been trading since basically around the middle of May. All right, and so we see the markets had a nice bounce on Thursday. We're looking for continuation on Friday. What kind of volume did we have in that big bounce in the S&P? Notice when we look at the SPY, we get a truer indication of how the market opened during trading hours as we see a gap that's sitting there. Those gaps will be filled. We're sitting at that resistance line on the diagonal of the SPY, and we'll see whether we continue on up or whether we stall out here a little bit before we continue. One would expect that we'll continue up into this area for that triple top, and then it's a question whether we break through. What kind of volume on the breakout on the big day? Above average. Probably not 1.5 times average, but again, above average as we saw good strength come into the market as the big boys entered back in this tight cycle that we're having here during the summer months, heading into August, which traditionally in modern times has been a bit of a sluggish, laggish, bad news month, and so just be aware of that and be aware of what history has told us and understand we might be getting great news out of Europe. How long does great news last? Probably not all that long. How long does bad news last? Probably a long time, as we've been seeing from the news that we're getting out of the Euro complex. So with that in mind, this is Butch Shorek, and we're going to, for those of you that are gold members, we're going to go through our stocks to watch, see what kind of effect that we had, as we're seeing some rotation take place in many of our stocks that we've been following for a long time, as we're seeing them lose some of their glamour, as we're seeing decreased revenues. Remember, these are stocks that are basically highly valued, high PEs, and so if they miss earnings, they're severely punished them. And if you don't believe it, take a look at that chart on CMG and see what that truly means. So with that thought in mind, for those of you that are not gold members, thanks for being here. If you'd like to see more free videos from Options University, go to www.optionsuniversity.com/freegold.com. All right, with that, thank you. By the way, that URL, that address will be at the end of this video. So please copy it from there. And for the rest of for the gold members, I'll be back in just a minute. And this is Butch Shorek, Options University. It's Friday, July 20th, 2012. Thank you for being here.